Hi guys, welcome back to the Financial Interest YouTube channel. My name's Dan. So in this week's video I'm going to continue on with my Invest in Terms series, and this time we're going to cover the PE ratio. So what is the PE ratio? So the PE, otherwise known as price to earnings ratio, is a kind of common ratio that's used a lot in investing, normally to kind of establish whether a company is over or undervalued. So this is made up of two main elements. First, you've got the price, which is the share price that the stock or company is currently trading at on the market. And then you have the earnings per share, which is basically the net income or the profit of the particular company. So if you take the price and then you divide that by the earnings per share, that will give you the ratio that you're looking for. I've already covered the earnings per share in a previous video, so I'll put that up on a link to that on the screen now, and then also I'll drop one in the description as well that goes along with the video, so you can check out that video as well. So here we can see Yahoo Finance, and we can see Facebook showing the current share price is 273.16. So if we take that amount and then we divide it by the earnings per share for the trailing 12 months, which is 878, then we get the total of 31.12. So it's important when you're looking at the PE ratio to realize that on its own it doesn't really tell you very much. You kind of need to compare it to the company's historic PE ratios to kind of get an idea of whether the current ratio is kind of high or low compared to its historic values. So aside from checking against the company you're looking at's historic PE, another good way to use the PE ratio is to check against the peers of that company or its competitor set. So we're going to take a look now at an example from Facebook and also Alphabet or Google, because that's part of Facebook's competitor set. Now here we are looking on Y charts. So this will only give you like the last 5 years data free. For more data you actually need to pay for the service. But here we can see if you're looking at Facebook's kind of PE ratios over the last 5 years, we can see that 2016 they kind of peaked up around the 90 mark, which you can see down here. PE ratios the past 5 years, the most it's been is 90, which was March 2016, and the least it's been was the 31st of December 2018. And then it also shows the average there. So obviously this has come down recently, and it's kind of now sort of hovering around just into the early 30s. So this is also good because it'll show you the ratio benchmarks of kind of Facebook's peers as well. So here you can see Twitter, Alphabet, which is Google, and Snap. Now I suspect the reason that these aren't showing PE ratios for Snap and Twitter will be because they're not making positive profit. So without the profit, then you won't be able to get the PE ratio because you're not making the earnings per share, or the earnings per share is negative. So we'll also jump into Alphabet as well. And we can see that over the previous 5 years, the least they've been is 21.43. and the most 66.12. We can see that this fits quite closely with Facebook, so we can kind of assume that these two companies work within the same range. Now, just for a bit of fun, let's go and look at the Tesla PE ratio, because this company's actually only become profitable quite recently in the last sort of year. So here for Tesla, we're seeing kind of crazy PE ratios. The maximum 1,417, which was literally just a few days ago. So that means that for every dollar of profit, shareholders are prepared to pay $1,417, which is a huge amount. So that means either the price needs to come down for that, or the earnings need to kind of go up quite a lot to kind of compensate for it. So what you would say from this stock is that it has an awful lot of growth already priced into it, and for me personally that's just like way too high to invest. You want to be investing at a lower PE ratio than that. So just to recap, I'm going to kind of just put a slide on and now and we'll look at how I actually use the PE ratio. So as we've discussed, the first one is comparing it with previous PE ratios of a particular company. The other would be to compare it to other companies within the same or similar sectors. And the final one would be as a confirmation indicator to let me know that this is a good time to buy into a stock. So let's go and have a look at Facebook here over the last kind of year. So obviously when the pandemic hit, it was kind of March. So that's when all the stock prices really started to drop. And we can kind of see here that it's sort of no coincidence that during 2020, the kind of lowest that Facebook got was around the lower 20s, which was in March. You can see there 23.2. So that would have been a great time to invest in Facebook while the price was quite low. And that's kind of how I use the PE ratio. I kind of use it as a confirmation indicator along with a lot of other different indicators. And as part of that, you need to understand the value of the company. You should never invest in anything where you don't understand the intrinsic value. So by understanding the intrinsic value, you know that this PE ratio or the price of the stock was selling at was actually like below the intrinsic value. So you knew you were getting a good deal when you were buying into it there. So that's how I use the PE ratio. So what different ratios are you using in your decision making to buy or sell stocks? I'm kind of always interested to know because these things can be used differently by different people depending on your kind of objectives. So please leave a comment below because I'm interested to hear about that as well. So that's it for this video. Please hit like if you enjoyed it and also consider subscribing to the channel if you haven't already. And thanks for watching and I'll see you in the next one. Cheers.